Hidden red flags in the SpaceX S-1 filing. When a generational titan like SpaceX files its S-1 prospectus to go public, the initial market reaction is almost always defined by unbridled hype and breathless headlines. However, beneath the dazzling promises of interplanetary colonization and global satellite dominance lies a dense, legally mandated map of structural vulnerabilities. Smart investors know the real story of initial public offering is never found in the marketing pitch, but rather in the finely printed, hidden red flags that the company is legally forced to disclose. The first major red flag buried within the filing centers on corporate governance and the absolute concentration of voting power. SpaceX utilizes a multi-class share structure that ensures Elon Musk retains definitive, unilateral control over all major corporate decisions, regardless of his actual economic stake. This means public equity stakeholders will have virtually zero say in board elections, executive compensation, or core strategic pivots. In text-heavy S-1 risk factors, this is explicitly laid out as a structural hazard where the interests of the controlling shareholder may diverge drastically from minority investors. For a CEO known for highly volatile public maneuvers and simultaneous management of multiple high-stakes enterprises, this complete lack of shareholder checks and balances represents a monumental governance risk. A deeper dive into the financial statements reveals an incredible, aggressive, high-risk capital expenditure cycle that could easily drain public market proceeds. While the operational revenue from mature Falcon 9 launches looks stable, the capital burn rate required to scale the Starlink satellite constellation and iterate the massive Starship platform is staggering. The prospectus outlines a recurring need for multi-billion-dollar capital injections just to maintain network infrastructure and replace decaying low Earth orbit satellites. Furthermore, any unexpected technical delays or catastrophic launch failures during Starship development could instantly freeze commercial timelines and result in severe cash flow crunches. Investors are essentially buying into a business model that demands continuous, capital-intensive reinvention just to avoid functional obsolescence. Another subtle yet deeply critical risk factor involves the complex web of intercompany dependencies and related party transactions. The S-1 details extensive financial and operational overlaps between SpaceX, Tesla, XAI, and X, formerly known as Twitter, including shared executive time, cross-company talent poaching, and massive infrastructure collaborations. This highly centralized Musk ecosystem introduces severe conflicts of interest where SpaceX resources or capital could potentially be leveraged to prop up or assist sister companies. Additionally, the filing's key man clause is unusually stark, admitting that the company's valuation and operational momentum are entirely intertwined with Musk's personal involvement. If his attention is split further, or if his polarizing public persona triggers sudden regulatory or geopolitical blowback, public shareholders will bear the direct financial brunt. Finally, the prospectus exposes a highly volatile reliance on government contracts, international regulatory compliance, and massive federal subsidies. SpaceX's financial health is acutely vulnerable to shifts in defense budgets, NASA allocations, and the fluid political landscape governing national space programs. Because Starlink operates as a ubiquitous global telecommunications network, the company is perpetually exposed to localized geopolitical crackdowns, spectrum allocation disputes, and foreign market blocks. The filing acknowledges that changes in international space law or national security mandates could abruptly halt operations in key regions overnight. Without the cushion of continuous government backstops and smooth global regulatory approvals, the underlying margins of the business could collapse far faster than the market anticipates. The potential of a SpaceX IPO remains undeniably historic, carrying the rare capability to fundamentally redefine the global aerospace and telecommunications economies. Yet capitalizing on this astronomical growth requires Wall Street to look past the romance of the stars and aggressively audit the earthly financial realities hidden in the documentation. Only by thoroughly decoding these structural red flags can an investor accurately separate civilization's vision from catastrophic financial risk. And to learn more about our own law firm's investment and financing legal practice, we welcome you to visit our website and contact our law firm to schedule a confidential consultation. Thank you.